Hey, what's up everybody? My name is Zach Pasquarello and I have had a bookkeeping business for the past 3 years, and I make videos like this all the time to help teach you things and fundamentals about bookkeeping and QuickBooks. So in this video specifically, we are going to talk about reconciling your accounts in QuickBooks Online. Bookkeeping is a 3-step process. First, you need to categorize your transactions, then you need to reconcile your accounts, and then third, you generate your financial statements. Categorizing your transactions takes the most amount of time, but reconciling your accounts, in my opinion, is the most important step of bookkeeping, and it's often the most overlooked step. So this video will be helpful if you are a bookkeeper, or if you're a business owner, or maybe you are an employee who works for a small business owner and you are in charge of the books. So this video is designed to give you a brief overview of how to navigate QuickBooks Online and how to get to the reconciling page on QuickBooks, and then I will walk you through a couple of the steps so that you can reconcile all of your accounts. First of all, before we get started, what is reconciling? Basically, we are making sure that the amounts in your QuickBooks perfectly match penny for penny the amounts in your bank statement. So keep in mind, your books in QuickBooks is simply a mirror image of your actual checking account. So you have a register in your QuickBooks of your bank account. All of the transactions that went through your bank account should also be in your QuickBooks account, but sometimes we make mistakes. So we reconcile our accounts to make sure there are no mistakes. That's why I said it's the most important step of bookkeeping. So you've already categorized all of your transactions in your bank account, so now they're all in QuickBooks, but now we need to check and make sure that the ending balance in your QuickBooks matches the ending balance in your bank account. So you should reconcile your accounts on a monthly basis because you need your bank statement in order to reconcile your accounts. So wait until maybe the last day of the month or the first day of the next month until your bank statement comes out, and then it's very simple. So I'm gonna put up on the screen here a snapshot of your QuickBooks account, and on the left hand side here we just navigate to this accounting tab and then we click on reconcile. Okay, so once you are in this reconcile tab on QuickBooks, it's going to be super easy for you to do this as long as you haven't made any mistakes and everything lines up perfectly. You see here you can choose the account that we're going to reconcile. I recommend that you reconcile bank accounts, so checking and savings accounts, all of your credit card accounts, and then you can also reconcile your loan accounts. And the reason why that's super important is because on a monthly basis you're going to pay off your loans, and typically it's one transaction coming out of your checking account, but pay attention because this is important. You need to split that one transaction because part of it is going towards the principal of the loan and part of the transfer is going to interest. So you need to split interest and principal. That's why you want to take your monthly loan statement. You should always be getting a statement from your bank or your loan officer, and you should see what your ending balance is on your loan. So let's say, for example, your loan was $100,000 and you just made your first monthly payment. Let's say you paid off $1,000 this month. So you might think that there are $99,000 left over on that loan, but that's not the case because $800 went to principal and $200 went towards interest. So whenever you go to reconcile that account, you're actually going to see on your monthly statement you have an outstanding balance of $99,200. So only $800 of that $1,000 transfer goes towards the principal of the loan. That's why it's super important to reconcile your loan accounts, your credit card accounts, so that you can make sure you're capturing the interest expense properly. In this example, we're going to reconcile a checking account. This is another reason why I usually recommend that you try to keep your checking accounts simple. I see some business owners have 4 or 5 different checking accounts because they'd like to have an account for income, expenses, payroll, taxes. I do not recommend doing that because for this example, whenever it comes time to reconcile your accounts, you're going to spend that much more time downloading your bank statements and reconciling your account. So try to keep it simple. If you want to have 2 accounts because you have a large payroll, that's okay. Maybe have one main account and then have one extra account for payroll, but seriously try to keep your checking accounts simple. Okay, so once you've chosen the correct checking account in QuickBooks, I'm going to show on the screen here, you're going to very simply look at your bank statement and enter in the ending balance for that month on your bank statement. So for example, let's say it's January 31st, 2023. So you would enter in the ending balance, and then you would enter in the date, and then you would just click this green button right here that says Start Reconciling. Okay, once you've hit Start Reconciling, now this page is going to pop up. It looks a little intimidating, but it's really not that confusing. This is just a list of all of the transactions that you have categorized and entered into your QuickBooks Online software. And if you have your bank account connected to your bank feed in your QuickBooks account, which I always recommend, this should be a very simple process because all of your data is pulled in directly from your bank account. So once you've made it to this screen, you just need to go through and make sure that all of the transactions in your QuickBooks are accurate and match the transactions on your bank statement. This can be a relatively simple process if you haven't made any mistakes, but this can be a very difficult process if you have made mistakes, or sometimes there's a technical error and the bank data did not pull in correctly, or sometimes a transaction is missed. So if that happens, you're going to need to sort through your bank statement and your QuickBooks one line at a time and check every single transaction. That can be a very tedious process. If you're a business owner, you probably don't have time for that. That's why it might be a good idea to hire a bookkeeper.